5 seconds to go. Start. In a historic turn, China's rise as an economic superpower is reversing. The biggest global story of the last half century may be over. After stagnating under the insular dictatorship of Mao Zedong in the 1960s and 70s, China opened to the world in the 1980s and took off in subsequent decades. Its share of the global economy rose nearly tenfold from below 2% in 1990 to 8.4% in 2021. No nation had ever risen so far so fast. Then the reversal began. In 2022, China's share of the world economy shrank a bit. This year, it will shrink more significantly to 17%. That 2-year drop of 1.4 percentage point is by far the largest since the 1960s and the first of any significance since the late 1980s. These numbers are in nominal dollar terms unadjusted for inflation, the measure that most accurately captures a nation's relative economic strength. Though China aims to reclaim the imperial status it held from the 16th to early 19th centuries, when its share of world economic output peaked at one third, that goal may now be slipping out of reach. China's rise recorded the world economy and its reversal could too. Since the 1990s, the country's share of global GDP has grown mainly at the expense of Europe and Japan, which have seen their positions hold more or less steady over the last 2 years. The gap left by China's recent retreat has been filled mainly by the US and by other emerging nations. To put this shift in perspective, the world economy is expected to grow by $8 trillion in 2022 and 2023 to $105 trillion. China will account for none of that gain, the US will account for 45%, and other emerging nations for 50%. Half the gain for emerging nations will come from just 5 of these countries: India, Indonesia, Mexico, Brazil, and Poland. That is a striking sign of possible power shifts to come. Moreover, China's sleeping share of world GDP in nominal terms is not based on independent or foreign sources challenging the party line. The nominal figures are published as part of the official GDP data. So, by Beijing's own account, China's rise is reversing. One reason this has gone largely unnoticed is that most analysts focus on real GDP growth, which is inflation adjusted. And by adjusting creatively for inflation, Beijing has long managed to report that real growth is steadily hitting its official target, now around 5%. This in turn appears to confirm every quarter the official story that the East is rising. But China's real long term potential growth rate, the sum of new workers entering the labor force and output per worker, is now more like 2.5%. The ongoing baby bust in China has already lowered its share of the world working age population from a peak of 24% to 19%, and it is expected to fall to just 10% over the next 35 years. Nothing is inevitable, but with a shrinking share of the world's workers, a smaller share of growth is almost certain. Further, over the past decade, China's government has grown more meddlesome and its debts are historically high for a developing country. These forces are slowing growth in productivity measured as output per worker. This combination fewer workers, and anemic growth in output per worker will make it difficult in the extreme for China's economy to start gaining share again in the global economy. In nominal dollar terms, China's GDP is on track to decline in 2023 for the first time since a large devaluation of the renminbi in 1994. Given the constraints on real GDP growth in the coming years, Beijing can only regain global share with a significant increase in inflation or in the value of the renminbi or both. But neither is likely. China is one of the very few economies currently suffering from deflation, and it also faces a debt fueled property bust, which typically leads to a devaluation of the local currency. Investors are now pulling money out of China at a record pace, which will add to downward pressures on the renminbi. Foreigners cut direct investment in Chinese factories and other projects by $12 billion in the third quarter this year, the first such drop since records began. Locals who often flee a troubled market before foreigners do are leaving too. Chinese investors are making outward investments at an unusually rapid pace and prowling the world for real estate deals. China's President Xi Jinping has in the past expressed supreme confidence that history is shifting in his country's favor and nothing can stop its rise. His meetings with Joe Biden and US chief executives at last week's APEC summit in San Francisco did suggest to many observers a turn toward moderation or at least a recognition that China still needs foreign business partners. But almost no matter what Xi does, his nation's share in the global economy is likely to decline for the foreseeable future. It is a post China world now. Stop.